So this would be true support. Okay, don't get caught up in all these, spikes. They're helpful, but they're not really where the market's going to react to. The market's better going to react to the closes. And look at how far away this is. Okay, this market is a good distance away from that, isn't it? Okay, so you can see that the test stopped short. Well, if you've gone through the CDs, when I talk about Fibonacci's, I talk about how if there is a 38% retracement, that 38% retracement means that likely it's a stronger trend. And it's because of this fact of the marketplace. You can see here that I took a Fibonacci retracement of that little move up. Okay? And when we're looking at a little dipper, we're looking at the market. Get the pen active here. We're looking at a Fibonacci retracement, but we're looking for several things. We want to watch how the market behaves here at the 38% retracement, here at the 61% retracement, and then lastly here at the 78% retracement. Because each one of these levels tells us something about how the market is acting. Now let's just think about this logically. Okay, remember in our example where we were selling our house. Okay, John, you're selling your house, and you're pushing the price up. And you remember how we got up to $1 million, and all of a sudden nobody wanted to buy it, so we moved the price down. Well, let's say for some reason we got crazy and we moved price down to $400,000, and up here we were at $500,000, and let's say we had about 50 people that were looking to buy, and we drop it to 400, and all of a sudden we've got 500. Isn't that useful information? I mean, doesn't it just make sense there's more interest at 400 than 500? Well, what's going to happen is what? You're going to raise your price again, right? And you're going to do it quickly. All of a sudden you say, well, okay, 400,000. All of a sudden all these people come out of the woodwork. Okay, yeah, sell it to me, sell it to me. And you say, well, whoa, wait a minute, folks, 450. And you got 400 people. Oh, that really was a 4. And then you raise it to 475. Okay, so you see this. See this candle? All of a sudden you have a hammer. Now, I'm going to deal with this in later sections, but now do you see why candlesticks are such an insight into psychology? Okay, so you've got this big candle. You've got this big wick on the end. And this wick is telling you something. The wick, and if you haven't been through that part of the course, I'll give you a quick primer. This is the wick, okay, this narrow black line. This is the body, this short black dot, okay? And then there's another wick here on the top. What the wick means is that the market traded all the way down here, but then by the time the hour was over, it ended up here. So what that means is once selling got deep enough down, more buying orders came in. And they came in very quickly. I mean, think about it. If you only have to drop your price 38 or 40%, I mean, that's not a whole lot. That means that there are people willing to pay up. Now, if price gets down here to the 618 level, it's not that that's too much. It just means that it's more of a normal retracement. When I see the markets moving to this 382 level and moving back up, all that means to me is I expect price to break through this high. That's all it means to me. If it breaks up any more than that, that's all well and good, but I don't expect it to shoot to the moon. I just anticipate it to break out over the high. Okay, and in this case, since we're trading between two channels here, what I would expect is that price would go to the upper channel. That's just the way the market works. I mean, these market makers, big syndicate traders have these lines on their charts. That's the whole reason why I have them on mine. And they're gonna look for the market to move up to that line. That's why it happens. As I said in the beginning, to a certain degree, it's a self-fulfilling prophecy. Okay, because other traders are looking for it, that's why it happens. But remember, I never once said that these patterns would always work. What I said was I'm committed as a trader to always trade the pattern until it doesn't work. Now,